So have you ever had a hard time staying in your trade, meaning you take a position long or short and then the market just continues running, but you place your profit target maybe at maybe 10, 15, 20 points because you're scared to stay into the market for too long because you may feel as if it's going to come back against you and stop you out. But then you see the market just continue running to the downside like today. We had this massive sell-off of about 400, I believe about 400 points today on the NASDAQ, all right? It was a decent sell-off, and then we kind of turned back around here. So I'm going to show you just a technique for all those out there that are having a hard time or looking for a strategy in which they can basically trail behind as the market is moving in a particular direction, especially if we have, shifted from bullish down to bearish or bearish to downside, right? With all this momentum, going to the downside. So basically what you need to do is just identify, first and foremost, the structure of the market. Secondly is to mark up your zone in what you're interested in getting into a trade from. And today, when you have a very, say, super trending day where the market is really pushing to the downside or to the upside, it may be difficult if you're waiting for the market to pull back, say, for example, to a key area of high probability supply area, on your higher range chart, because the market may not be pulling back that way, right? So you can scout with the lower range chart, for example. I like to mark up my higher range charts first at a supply or demand area. But if we're just trending hard in a particular direction, up or to the downside, then, and I'm not getting any pullbacks to, a supply or demand area on my higher range chart, then I'll just move down to my lower range chart to look for an opportunity to scalp moving in the direction with the higher range chart. Okay. Now, here's a great technique, tip, however you want to call it, that will allow you to stay in your trade longer. Yes, it's hard to do sometimes because I know that when you see yourself in profit, you're looking to go ahead and close that position out because you're scared or, that the market may come back against you to your break-even point or beyond that and then stop you out. So you want to do what? You want to take profit so that you can say, okay, I made some money today, and I'm going to go ahead and close shop or look for one more setup and be done. Now, I will say this right now. A lot of people always ask me how or what's a method to be able to sustain profitability. First and foremost, you've got to identify a trading plan for yourself, but you got to be able to know how to trade the correct way first and foremost. I will say that right now. If you're someone that's taking way too many trades, 3, 4, 5, 6, 7 trades a day, then to me, you're over trading. If you are making one trade, you do well, and then you say, I'm going to put a limitation or cap on my second trade. That's all I'm going to do is 2 trades a day. That's going to help you stay in the game longer because let's say, for example, you profit your first trade and then the second trade, you broke even or you took a loss on, right? Well, either you made a little bit of money for the day or maybe you had a small loss or no loss at all, then close shop, okay? It's better to take 1 or 2 setups and that be it than continuously taking 3 and 4 or 5 setups. At that point, you're over trading and you're revenge trading, trying to make up for the difference of what you first and foremost won the first time round, lost the second time round, and then it becomes a seesaw effect to where maybe you won the third time, or maybe you lost the third time and lost the fourth time. Place a limitation on the amount of trades. I do not know how to stress that enough to each and every person out there. The more you spend time in these markets, they will come back against you or they will have their hand with you. When you are profitable and making money, do the same thing in repetition. Don't change your strategy. Trade the same way, using the system that works for you, following your trading plan, and that's going to help you remain profitable, okay? Now, if you are just someone that's taking back-to-back losing trades, multiple times a week or multiple times a day and doing that several times a week, then something is not right in what you're trading or how you're trading, and you need to go back to the drawing board to either perfect it or find a new strategy or system that's going to work for you, okay? Now, this is how you can basically remain yourself or keep yourself into a trade longer if the market is trending in any particular direction. So if we got a bearish momentum to the downside right here, I'm going to show you a trade setup that I took today and post it over on the Discord. If you're someone that's interested in joining the Discord community, I will say this now, it is free to join, okay? The link is the first one down in the description portion of the video. Click on it, join, it's free to join. Now, what I'm going to show you are examples of setups that I take that are posted over on the Discord community. And these are types of trades that I go back and I break them down for our private community members who are elite or ultra elite members or supporters of the channel. If you're interested, I'll talk about towards the end of the video everything that you receive for a very inexpensive just fee. Okay, basically, I mean, we're talking about pennies on the dollar a day that could be game changing, life changing for you, yourself, and maybe your family or whoever else, if you really are passionate about learning or understanding how to trade the correct way. Now, we're bearish to the downside. I see that, but I'm not getting where the market is really, making nice swings, making lows, lower highs, lows, lower, swinging that way, and to where we have aggressive areas of selling coming out of a swing where it's breaking structure, and then I can look for a pullback to a key area of supply. We're just getting straight pushes to the downside, okay, until they got about right here, pull back, broke structure, and then it turned back around. It did come to this area right here, all right, and it did somewhat reject. But right here is kind of a telltale sign for me when I see this right here. They made this low, pull back, and then they wicked out the bottom right here. They didn't close below it. So this is a sign of rejection to where they don't want to push lower by basically wicking out or wicking below the last low that where the last bearish candle down to the downside. This is kind of telling me they maybe want to push higher and searching for higher areas. But before that happened, I switched down to my lower range chart, and you can see this is all that bearish direction or movement to the downside where the market was trending today. Okay. All right, so basically what I'm doing is just the same way that I look for pullbacks to key areas of supply, because we're moving lower here. It will be demand if we're pushing higher and trending. Look, the market is making, lows, lower highs. You can see it each time it breaks structure to the downside, okay, as it's moving lower, all right? So then I saw this area right here. This is about 1025 when it pulled back right here. Now, there was another setup right here, okay? Blow it up for you a little bit, but the market did not come back tick to tick to this zone. It was off maybe about 2 or 3 ticks right there. Had it come to this area right here, I would have taken this trade. This is a nice, beautiful area of supply. What is high probability? I talk about high probability versus low probability setups because that's what makes a difference when you're actually looking for, great setups. So many people are just taking low probability setups, and I don't believe they know that they're taking low probability setups, and that's probably one of the reasons why your trades are not working out. I will say that, okay? Now, I'm not saying that low probability setups, the market can't come back and reject at them once or twice, whatever the case is. I'm just saying high probability setups carry a lot more weight, and it's where the imbalance is resting back at the zone, and if it hasn't been tested, the percentage is higher for them to want to reject or react at the area versus a low probability setup. Now, this is a great setup right here. The market comes down, pulls back, we break structure below this low right here. This is a structure break, and that's what I'm looking for. Do we have a break of structure? That's part of that's one of the biggest factors when it comes to me looking for probability or high probability setups. Yes, we do right here. Then it pulls back to this key area right here of supply. All right, I'm interested in that opportunity right there. So when they got there, all right, they tapped the zone, they reacted off of it. Then they came back. Okay, so maybe you had your stop loss. I always talk about if you took this trade right here going short, okay, I would say probably if you went short probably either here or here, then it came back and then it maybe, I'm not going to say it stopped you out because let me see, 680, if you went 3 or 4 points, 687, let's see. May have stopped you out there, especially if you went 3 points. If you went forward, it never stopped you out. Well, yes, it did because it came back again. So maybe you got stopped out here. That's going to happen from time to time, meaning that the market is going to kind of test higher areas within a swing to see what traders are, where their stops are at. So maybe you got to trade here. They know that people are going to short from right here. They stopped you out. You became liquidity. They pushed down. Those that went short right here, they tested them again. If you went short right here at 683.5, then the market at 4 points, 3 points, maybe they didn't stop you out right here, and then you could take it in short going short. But this was a valid opportunity going short. I didn't just jump into this trade off the lower range chart when it smacked the first time or tapped the zone. I wanted more confirmation to see, if they were going to continue pushing deeper into the zone, which they did, okay? They tested it here, came back, rejected. They went a little higher. I said, okay, they're pushing higher now. So I'm trying to figure out, are they going to break through this area? They rejected this area again, all right? When they did not break above this swing high, say, for example, right, or this little swing area right here to the upside, you see, right, like right here, this one right here, they broke slightly above. This one, they came back, they broke above right here, came down. This one right here, they basically tapped it, tick at the top end of it. The wick of that bearish candle did go above, but this is a sign of rejection right here. Wick here, they would, and then you can go short. That's what I was looking for, was sign of weakness back at this area of supply to actually go short off of. Now you might be saying, okay, so you're going to talk about, how to, maximize profits, how to stay in the trade longer. Okay, here it is. Once you're into a trade, what you're going to be looking for first and foremost is the area, the zone, where to place your stop loss. So once you get to the trade, let's say you got to the trade somewhere in this area right here, your stop loss is going to go on the back end to where, you enter the trade where the rejection point was right here at 686.5. Give yourself 3 or 4 points breathing room in case they want to push down and come back again. That way, even if you get stopped out, you're not incurring a big stop loss, or, maybe, I always talk about putting your stop loss tick to tick. You're going to run the chance more so, unless you have very limited capital, you're going to run a chance to where they're going to test that area. Like right here, if you went short here, they came back and stopped you out. Right here, you put it right here, they came back and stopped you out right there, but they did not break above, which means that the interest lied more so of them wanting to continue moving to the downside, which they did. So let's say into the trade now. Stop loss goes on the back end here. What were you aiming for profit? The first area of profit is going to be right here below this swing right here, because we've got a low, lower high. It took out this swing right here. It made a full-on new low. Once it comes into the supply area, we're going to aim for this low right here just as well. All right, so now that we're in a trade, our stop loss is right here. Each time the market makes a new low at the broke this area structure here, and then it makes a new lower high, because your stop is going to be right here, and then it breaks and makes another low. So basically you're making where they first, once you're into the trade, it breaks this area here, take majority off of your profit, makes a new low. Once it makes that first lower high from where you enter your trade at, wait for it to break more structure to the downside, meaning taking this swing out right here. Then move your stop from here to here. Okay, now that it's made a new low, again, new lower high, basically it keeps running to the upside right here. Your stop is really right here. Once it comes down and makes a new low below this low, move your stop from here to here. So each time the market runs and breaks structure lower, making a new lower high and a new low, move your stop accordingly. So now your stop is like right here, right? In this area here. Low, lower high, breaking more structure from here to here. Move the stop, right? Look, I'm guilty of it too. Sometimes we just want to take profit. Like right here, I would have taken profit more so once it broke this area structure right here. I'm going to get to the trade right here at 680, or 679 area, and aim for this area right here around 53. That's 20 points, whatever the case is, or more. And then you probably say that's enough for me, right? It is for me, because the thing about it is, if I can get 20 plus points a day, then I'll go ahead and close my position out. And because my purpose and the way I style on how to trade is compounding, because I know if I can get those points each and every day, I'm compounding my account. That leads to me being able to take payouts when I need to take them, or withdrawals or deposits whenever I want to take them out, as long as I'm securely taking most of my profits off where I need to get out of the trade at. But if you're someone that was able to capitalize off of this setup right here, let's say you got in here at 80 or 679, and the market comes all the way down, man, you way down here around 600 area, you done picked up 80 points on the NASDAQ. All right, simple as that. Okay, there was another opportunity like right here where the market pulled back to this key area of supply right here. Okay, came back. Where we're going to aim for the stop, the profit target, right below this low. Broke, new low, came back, supply, aggressive selling, high probability setup, aim for the low right here. Okay, so you get in right here at 23,586. Stop loss goes in the back end here at 23,592. Give yourself a couple points breathing room right there. And then look, market makes a new low. Your stop is here. New lower high. Broke more structure below this area here. So stop goes from here to here. Okay. And then if you have your stop right here, and it's like you have your stop right here, when the market comes back up to this area here, basically you're pretty much at break even point. Okay. So just move your stop down accordingly each time it makes a new lower high when the market is trending to the downside is what I'm trying to say. Okay. Just a simple tip of what will help you try to stay into your trades longer and maximize your profits in the end. For all those beginners out there that are questioning about how can I stay in my trades longer, they're getting frustrated to where, listen, we are not perfect. Okay, I'll say that right now. No one can capture and catch it all. All right, sometimes we do. Okay, but the thing you don't want to do is catch a falling knife, right? So you want to be able to get the market direction correct and trade with the direction of the actual market. I'll always talk about that, okay? But that's all I got. That's all I have for you guys today. I just want to share that tip, that advice. I've talked about it before. People are still asking me how can they, maximize or stay in their trades longer. This is a great way to be able to do so by trailing behind price each time it makes either a new lower, a lower high or a higher low if the market is trending to the upside, okay? Now, if you're interested in becoming an elite and ultra elite, what do you receive, okay? The link is down in the description portion of the video. It's right below the Discord link. It's titled Ultra Elite Supporter. Once you click on that, you're going to see 3 tiers pop up. Give it about 2 or 3 seconds. Choose either the elite or the ultra elite tier. With the elite tier and becoming an elite supporter, you receive all the trade breakdown videos, okay? There are tons of that video content there, all right, where I walk you through in depth trade setups that I posted over on the Discord community. I go back and I break them down for the elite members and ultra elite members, okay? That private access to that community is going to basically help you understand the blueprint, the strategy, and how I trade, but also walking you through these setups so you can look for these same similar type of setups when you're back testing and forward testing once you understand the strategy. So I'll walk you through structure, I'll walk you through price action, I'll walk you through the stop loss, placement, and TPs for these actual trades that I take. So I'm talking to you and letting you know why I took that trade and breaking each one of them down for you, okay? That's probably the best way to be able to educate or understand the system and how I actually trade is me walking you through and showing you these setups and talking to you about them. Also, you receive the video playlist and a great video that I covered for anyone struggling with the concept surrounding the basis of market structure as well, okay? Now, if you want to become an ultra elite supporter, you receive everything I just discussed, plus the live recorded trading sessions, which I'm getting ready to post one today that I did, as well as market recap videos when I do post those videos. But yeah, you receive those live recorded trading session videos where they're the full on, my full sessions or my sessions where I'm basically as I'm engaged in the market, looking for trades during the New York session. You see me capture or get into trades, and I tell you why I took those trades, so you can understand this as well. But it's during the actual session, okay? All right. So these are live recorded sessions where I'm breaking things down for you, okay? But outside of that, that's all I have, guys. If you are not a current subscriber, please take the time to go ahead and sub by clicking the subscribe button down below. Make sure to turn your post notifications on by clicking that bell. If you're doing the biggest favor is drop a like on the video. I definitely appreciate it. Thank you and take care, and everyone have a great weekend.